on. Share screen. Okay, so the first thing we're going to do is go over 17, which was the one you were to do for today. This one is net income approach. Similar again to cash flow in the way that we put stuff in. So the only trick with these is to watch the income tax. And so kind of read through the problem, additional information first. And if you do that, if you go down in E, you'll see that it says, assume that the income tax for each year is paid in the year it's shown as an expense. And so if that's the case, you don't have to do anything with it. All right, so we have 3 years. And if this is the net income approach, we start with the net income. And so we're going to have our sources. This is the way I do it. I set it up on a piece of paper or a spreadsheet, and I do it like this. And then I can just kind of go through. And as I read through the problem, put the stuff where it goes. So we start with net income. And just basically copy it down. So it's 60, 100, and 150. Okay, so what's the first adjustment we make?
Depreciation.
Okay, and what we do with that? Where does it go? Is it a source or a use?
Oh, source.
Okay, good.
Line.
Okay. All right, and so all we're going to do is add back the depreciation, which was 200,000. Okay. And so now let's start in the additional information. Because the income tax expense is what it's going to be paid, we don't have to do anything with that. And so now we're just going to go down through the information that we have. So first thing they tell us is dividends. And dividends are going to be 30% of the net income. Source or use?
Use.
Okay. And so we're just going to take the net income. And we're going to multiply it by 30%. And that's what they're going to pay out in dividends. So we're going to copy that across. All right, so that's just 30% of net income. Again, if you have questions, ask as I go. All right, then we have accounts receivable, accounts payable. So accounts receivable, the same thing happened every year. It increased. So if accounts receivable increases, is that a source or a use?
A use.
It's gonna be a use, right? Current asset, if a current asset increases, the effect on cash flow is a decrease. And every year it increased, so they're all gonna go down here. Okay. Now accounts payable, on the other hand, the first year it decreased, the second 2 years it increased. So where would a decrease in accounts payable go? Source or use? Current liability, if a current liability decreases, what does cash flow do?
Increase.
No,
Oh,
it
it
decreases.
decreases.
Decrease, right? Remember, current assets opposite current liabilities the same. So for accounts payable, that first year, the 5,000 is gonna go here. For the second 2 years, it's gonna go up here. Because it increased, it is a source. And so you just don't put anything in the 2 spots. So you can put a 0 in there if you want to. Do that. And then these 2 would be 0. And that's the proper way to do it. I said, if you don't do it that way, I'm going to take off for it. You don't put things in there with parentheses around them. Okay, so current assets, current liabilities. Same thing as cash flow. For current asset increases, cash flow decreases. For current asset decreases, cash flow increases. Current liabilities are the same. If they increase, cash flow increases. If they decrease, cash flow decreases. Questions on those? Okay, now they're going to buy a piece of equipment during X3. So they don't want to borrow any money. So we're going to put the price down here. Price, full price, always goes down here. And I'm going to do this just, and it's not something you have to do, but just to remind you that you have to do this. So the bank loan would go on the top if there was one, full purchase price on the bottom. Again, don't net it out. It doesn't show the true picture. All right, so that's all we have. So we're going to add those up. So there's our total sources. Total uses. So what we're going to do is see if she has enough money to buy that piece of equipment without borrowing anything. Okay, remember your next step is your change in cash, which is simply taking the sources minus the uses. Beginning cash, they tell you, was $10,000. Find the ending cash. you're gonna take your change in cash plus the beginning cash. Ending cash becomes the beginning cash for the next year. So we're going to copy this across and copy this across. And again, as we discussed the other day, how the realistic this thing really is, we don't think so. All right, questions?
My questions aren't on this problem because I did this, but when I was looking ahead at the homework, there was a negative net income.
Mm-hmm.
So because you were saying that you never have parentheses in this. So if
Well,
there's a
what I mean with the parentheses is this. With your,
Okay.
so what students do is instead of, they'd be lazy, instead of doing this here and here, they'll
Okay.
put it up here and they'll put this one in a negative number. That's what I mean.
Okay. So
Just
would
so
a negative in net income actually be similar and be a use of
Nope,
become a use
nope, you put it all,
Okay.
it stays right here.
as a negative number?
Correct.
Okay.
Yep.
And then, if there's, you can't be a negative dividend paid, so you would just have nothing instead of calculating a negative off of that. Would that be
Which one did I give you?
22?
All right, let me just look at it.
Because it said assume, it was assuming dividends are only paid out during profitable years.
Right.
So I would assume the profit is based upon if there's a negative in net income, there would be no dividends paid.
Right.
Yeah. And then I wasn't sure about assume operating losses can be carried forward. Would that go in that diagonal method that you were
No,
going through, or?
I don't even know why they put that in there. Because all it does is confuse people and you don't actually do it with anything. You don't do anything with it.
Yeah, that's why I was trying to figure out. I'm like, is that supposed to go anywhere or make any adjustments? So since it wasn't something we covered in class, I just wanted to ask the question.
Yep. So the one that I gave you for homework, which is the net income approach, is a little tricky. And so we're going to talk about that just for a second. If you look at the first line they give you in number 22, it is the budgeted pre-tax income. So for that third year, you're going to have to calculate your income tax expense. And you actually have to you're going to have to do that to get your income tax number or net income number.
And you would have to calculate the income tax as even on the negative net income number, wouldn't you? Because you would get a credit, or no?
No. If you have a loss, you just don't pay taxes. So that's kind of what they're talking about. If this was the real world, they could use that loss, carry it forward to reduce the coming year's tax expense. You can carry that loss forward. That's what it is from an income tax point of view, but it's nothing you have to worry about in this problem.
Okay. So you would still calculate the income tax off of the 150 in the third year to calculate the net income for that third year.
Correct.
Okay.
Yep.
I had most of it right. I just,
Okay, so what I want to do today is work on the cash receipts and disbursements. And because this one is harder, we're going to spend more time on it. And this is like I started the other day with you, where they were true credit sales. So we had to divide between cash and credit versus credit cards. And Monday, I'll show you a credit card one. Those are actually pretty easy. So honestly, cash budgets are all about how well you follow directions. And honestly, that's exactly what that is, because they tell you exactly what to do. But it's a matter of how well you follow directions. So I picked one of the hard ones to do. And so what we're going to do is problem number 21, which is Ziggy's. And so on page 581 is where it starts. And so we're going to start with the information that's on 581. In the paragraph, they give us the beginning cash balance for July. We'll have to come back and get that. But they give us our sales. So that's the first thing that we're going to do. All right, so we are doing Ziggy's Diner. And we have the information for all the way through from March to October. Okay, March to October. And all I'm going to do to start is put in the sale numbers. And to me, these sales figures would be very typical of a hospitality industry property, because you're building in the spring. Those are your good months, and then it starts to decrease. So what your hope is that you build up enough cash during your peak season to cover you through your slow seasons. All right, so that's always step one. Just put in the sales. Step two, so I'm going down to the next line, says they are 40% cash, 60% regular credit. Okay, so that's going to be our next step, to divide them between credit and cash. And that's all I'm doing. I'm going to go into each month. I'm going to take this, I'm going to multiply by 60%. I'm going to take this, and I'm going to multiply by 40%. So that's divvying them up, and I'm just copying that across. This is where Excel, if you use Excel with your formulas, it is a blessing in disguise. Okay, so we know the credit sales are going to be split to when they become cash. And so I'm going to draw a line under my credit sales, Because when I go to add my columns, I want to make sure I don't add those in. I'm going to add in when they've been converted to cash. And so the next thing tells you exactly how they're converting to cash. So in the month of the sale, 10%. Month after, 60%. 2 months, 20%. 3 months, 8%. Bad debts, 2%. If you add all those up, they come up to 100%. Okay, it's all about the diagonal. And so we're taking the credit sales and we are splitting them out to when they become cash. So I'm taking March's credit sales. In the month of March, I am going to collect 10%. So I'm taking the credit sales times 0.1. Maybe. Oh my gosh. There. Okay. Now be careful with this because this is where the most mistakes are made. 60% is going to be the collected the next month. So don't put it in March, put it in April. That's the next month. So I'm taking the credit sales and now I'm multiplying by 60% because that's what I collect in April. It's all about the diagonal. Students have a tendency to split it up, but you put it in this month. That's not when they converted it to cash. Okay, so in May, 2 months later, I'm still taking that 30,000, and now I'm going to multiply by 20%. In June, I'm going to take that 30,000 and I'm going to collect 8%. Now, what about the bad debts? What do I do with that? That 2%.
Don't you just make like a separate spot for that?
Yeah, you really don't have to do anything with it. I just like to put it, I'm just putting it in there while I show you, just to say you don't do anything with this, because if it's a bad debt, it's not going to be converted to cash.
Okay.
So honestly, you don't need to put that on there. But what I wanted to show you is if I take this plus this plus this plus this, okay, and let's say I'm going to just go down here and I'm going to find out what 2% is that I'm not going to collect. And then add that to my little total. You see how it equals the 30,000? So I would suggest check these numbers out. Remember, they're not going to equal because you have that 2% that's not collected. But make sure these add up to 98%. Because once you have those formulas in like that, it's simply copy across. Say, this is where Excel really can be your friend. And if you can't do it on Excel, okay, you're just doing some calculator punching. Now, keep in mind that we have been asked to do this for July through September. July through September only. We needed the information from the months before to fill in all of these rows. You probably didn't need March, but so when you're doing your totals, only total up the months that they're looking for, because those are going to be the only ones that you have all the information for. All right, so with this piece, split it, credit, cash. Cash, you know you're going to collect. Now go split your credit sales as to, again, follow directions. In the month, it's 10. Second month, it's 60. Third month, it's 20. Fourth month, it's 8. The 2% that's not collected doesn't get put in your cash budget. Again, it's how well you follow directions. All right, questions on the split there? Okay, let's keep going. So we have paragraphs of information. Paragraphs of information. And so if I was doing this on a piece of paper, I'd go down about halfway. Put my disbursements, my receipts, because this way I can go through the problem and just put stuff where it belongs. All right, so I'm on the top of page 582. First sentence says, interest income of 1,000 is expected in August. Interest income is a receipt, and I only put it in when I get it. Okay, again, if you have questions as I go, stop me. In September, they're going to sell some extra equipment, and they're going to sell it for $2,000, and the value is $1,000. So if they estimate that the equipment is going to bring in $2,000, and it has a book value of $1,000, what of those numbers would you put in a cash budget? What is the piece that involves cash?
Wouldn't it be the whole 2,000 because you received that?
Exactly. So you got to watch that. Sometimes they'll tell you this is its book value and they sold it at a gain of, so then you would have to add the gain to the book value to get cash. Sometimes they tell you it's a loss, so you would have to subtract that off your book value to get your cash. But in this case, they said we're going to get $2,000. Now we were doing that in September. During September, they're going to sell 1,000 shares of their capital stock with $1 par at $5 a share. Okay, so when they sell capital stock, which value do I use? Par value or selling price? Look at it from a cash point of view. How much cash are you getting per share?
That would be the 5.
Okay, and this is a cash budget. So you would record it at the cash. So it's going to be 5 times 1,000 shares. It's going to be $5,000. Everybody okay with that? Cash
Mhm.
received, all about cash received. Back to the dreaded cash flows, cash received. All right, that takes care of the first paragraph. All right, now the next paragraph is a little tricky. This is the only tricky part of this particular problem. We're talking about buying food supplies and beverage supplies. And this is the first mention that we have food and beverage in those sale numbers. We'll come back to the payments and the food cost percentage. Let's go to the first or the last sentence first. It says that beverage sales are half of food sales. So if beverage sales are X, that means that food sales would be 2X. Good old algebra again. Does that make sense to you? Beverages are half of food. So if beverages are half, if a beverage is X, that means that food is 2X. Yes or no? So that's the only tricky part with this.
Yeah.
Okay. So when we go down here, the first thing we're going to do is split those sale numbers between food and beverage. So if this is equal to 1, that means that this is going to be 33 and this is going to be 0.67. Because this, we have a total of 3 parts. They're 1 part, they're twice that 1 part. And so what we're going to do is take the food sales, take the total sales. To find food, we're going to take the sales and we're going to multiply by 0.67. For the beverage, we're going to take those sales and we're going to multiply by 0.33. Okay, and those two added together would give you your 50. Carry it across. And that is the only tricky thing with that one.
those are the actual sale numbers. Don't we have to calculate the cost for the disbursement?
We actually do. That's why I'm gonna draw a line under it.
Oh, okay.
And then
Sorry,
we're
I
gonna,
was getting thrown by the disbursements that I'm like, we're not dispersing all this money.
all right, let me just label this way. Now that we know what the sales are, we can go make the purchases. So food purchases. All right, so let's see what they do. Payments for food are made 1 month after the sale. And it's 35%. They're paid for 1 month after the sale. Remember, we don't care when they buy things. We care when they pay for them. So these are my food sales. 35% of that is going to be my purchases. When would I pay for it? What did we just say when they're paid for?
The following month.
The following month. And so that's exactly what I would do. In June, I would take the food sales for March and I would multiply it by the 0.35 because that's when I pay for it. And I would continue that across. Okay, again, it's not when we buy stuff, it's when we pay for it. And it's all about following directions. So food purchases are 35% of food sales. They are paid for in the following month. So food sales for March are this. The 35% would be paid in the next month or April. Beverage purchases. Let's see what they say about those. So beverage, the percentage is 25%, and it's paid 1 month in advance. All right, so beverage sales for March, 25% would have been paid for in February. But remember, we're only doing this for July, August, and September. So we'll go to see what's going to be paid for in March. In March, we would take our beverage sales for April. We would multiply it by 25% because they are paid for 1 month prior. So food purchases are paid for 1 month later. Beverages are paid for 1 month prior. And again, follow the directions. And you can see you're not going to have anything in there for October because we don't have November sales, but we don't need it. We're just finishing out July, August, and September. All right, that's probably the whole trickiest part of this whole problem right there. Questions? Okay. All right, so your next thing they tell you, again, we're just going down through. Labor is 40% and paid for in the month. Make sure that you go back to the total sale number to fill this in. So we would go all the way back up here times the 40%. And we would just carry that across. Fixed expenses, and listen for this, except for insurance, depreciation, and taxes, are $8,000 a month. So that means that we're going to deal with insurance, depreciation, oops, and property tax. Okay, so what do they tell us? Insurance premiums are paid quarterly. Again, when are they paid? They're paid quarterly in January, April, July, and October. And they're $3,000. So that's exactly what we would do. We would put $3,000 in April, July, and October, because that's when it's paid. All right, depreciation. Okay, depreciation is $3,000 a month. What do I do with that? What do I do with depreciation on this cash budget?
Yeah, we're not actually getting anything, so.
No outlay of cash. So depreciation does not belong there. I'm just putting it in here so that you know to not put it in there when you do yours. That makes sense. Property taxes are 2 installments, one in July, one in December. All we have to worry about is July. Okay, what else I got? Board of Directors wants to pay a dividend in July of 25 cents per share, and they have 20,000 shares. So all you would do is multiply nope, sorry, it's August. You would multiply the 25 cents times 20,000 and you would get 5,000. Okay, and then the last piece, they plan to in September buy equipment. Now, you can ignore all that stuff about a loan. So some of the problems that could happen, and you're not going to actually see any in this class, but if they got to the point where they were dipping below their minimum balance, they would actually go do like a line of credit and borrow money. And then as soon as you had extra money, you would pay it back. That's not happening in this case. Ignore that piece. So we're going to total. And again, I'm only going to do it for July, August, and September because that's all I need. And make sure you add from the line down. I'm going to go down here. And again, I'm only going to total July, August, and September. And again, from the line down. To finish it off, change in cash. It's going to be your receipts minus your disbursements. They told us the beginning cash, that was at the very beginning of the problem. For July 1st was 2,400, which means that our ending cash will be your change plus the beginning cash. That becomes your ending cash. What we end 1 month with, we start the next month with. And then just copy the formulas across. And there you be. All right, questions? So that's one of the harder ones. That's why I did it, because of that split in beverage and food sales. Other than that, I think it's okay, but that's just a little bit different. All right, questions?
I have a quick question.
Yeah.
When you got the beverage and food percentage of 0.33 and 0.67, how is that determined?
Okay, so it tells you in the problem that food sales are twice beverage sales, or it says that beverage sales are half of food sales. So if beverage sales are X, then that means that food sales are twice that much. So we have a total of 3 parts. So they're 1 part and they're twice that much. Does that help?
Yes, thank you.
Okay.
Hey, Mr. Herman, sorry to interrupt, but our review's at 12, right? This isn't my class, is it?
Justin, get out of here. Yes.
Okay, I'm so sorry.
Yes.
See you at 12. See you at 12.
All right.
Can you scroll down to the bottom just so I can double check my math? Okay, so I had rounded. That's why I was seeing the 0.5 and I was like,
Oh,
I
yeah,
had
you can
rounded up
round.
above for the food purchases, so,
That's fine.
okay.
All right, I'm gonna stop my share. All right, so here's the deal. You have your net income graded assignment due tonight, which was 22, right? Yes. So that's the net income approach. That one is due tonight. And then for Monday for practice, I want you to do number 19. That's cash receipts and disbursements. So what I've done is that we'll go over that one on Monday. We'll go over a credit card one on Monday. I will assign you another practice for Wednesday. And then Wednesday night, you have 2 assignments due. One is cash receipts and disbursements, and one is a credit card. But I'm gonna go open them up so that you can work on them as soon as you feel comfortable doing them, so you don't have to wait till that last minute. And then what my plan is next Friday is to go over all 3 graded homework assignments as a review for your last test, which is, what did we say? Wednesday at 7:30 a.m. I will open it at 7. It is 2 parts. And so you have that period of time to do both parts. And I decided to be nice, which is not my nature. And so each part is going to be 50 points. So I'm giving you a chance to earn some extra points. Questions?
Do we have a section of our research project due this weekend?
You certainly do not. The last piece, which is the executive conclusion, is due on the 9th. But again, you can go do it at any time. Those have been open since the beginning of the semester. So in fact, I would suggest that you do that.
Heard.
If you're
Thank
not
you.
bogged down with a lot this weekend, go get that done. And that just takes one more thing off your plate. It's up to you. All right. I'm going to stop recording.